folks, Scott here, and this is the wrap for Tuesday, November 5th. So interesting price action here. Let me show you on a daily chart what it looks like for today. We actually have what I call a 3-day wedge, or you could call it a multi-day wedge, but real simply, we're closing. Market's still live. Got a few minutes here. You may see it get a little jiggy here into the close, but we're going to close lower than yesterday, but above the close of 3 days ago. And today's high was less than yesterday's highs, but above the low of 3 days ago. So you end up with this part of a wedge being formed here. I'm just calling it a 3-day wedge for lack of better terms. And I thought it would be helpful to show you the results of fading gaps after such a 3-day pattern when above the 200-day moving average. It's occurs fairly frequently, and it's not one I've looked at in a long time. But check out these results. Pretty powerful and interesting. So I'll use Gap Trader, my back testing tool. Fading gaps after such a 3-day pattern. Slight bias for gapping down on the subsequent dates. Happened 82 times. 45 down, 37 up. Using an end of the day stop. Not something I recommend, but a good place to start your analysis. Shows very good odds for shorting an up gap after such a scenario. And not good odds for buying a down gap. So this is just above the 200-day moving average in the particular 3-day pattern I just described. Pretty compelling. I'll rerun these numbers for our members in the morning using our MTG stop parameters to confirm the tradability of up gaps, and a down gap's probably going to be problematic regardless, just because the win rate's already starting off at such a low point. Alright, so a little food for thought going into tomorrow. Now today, the scenario we had was also interesting. We were gapping right around the lows. It depended on the market if we gapped just in the UL zone or the UL zone. But you can see even the gap between the close and the low. This is an average all 8 indices, and because we did have different closing directions yesterday, we had some UL and UOL zone gaps. We also had some DCL and DL zone gaps. Even with the mixed data, it wasn't too bad, but not too great either. More neutral overall between the close and low, and below the low it sort of fell apart. Just a 50-50 trade at best. 5th of the month tends to be problematic. Using MTG stop parameters, down gap wasn't great. Unfilled up gap is positive though. Neutral to slightly weak after a doji. After a hammer candlestick, slightly positive. It's a pretty mixed data there. The way I summed it up, or one more data point that I showed in last night's wrap, November in general, above a 10 and 200-day moving average, strong numbers for down gaps. And today we saw more of the same. But if medium to large in size, which this was... Yes, we opened at 1756 and a quarter. Then it's been 50-50 and a little bit weak. So overall, just too neutral to risky is the way I saw it. Just not bad, just not really compelling either. So no fade for me at the open. I explained to folks in our trading room that I would be open-minded to getting long in the right scenario. I was hoping we'd have something that showed up in our 15-minute and first-hour range guides. They had a slight long bias, not quite strong enough for me today. So what I decided to trade them what I call straight up. In fact, hold on before I do that. We opened at 1756 and a quarter, sold off down to 1750.5. You would have been stopped out using our MTG stop parameters. That was a 6-point move, assuming you had a tick of slippage. So stop today was 5 points. Good call, good decision to pass on the opening gap trade. Now, the first hour high breakouts looked pretty good, so I said what I would do is I would go long in a pullback to 1756.75, and it's been one of those years. Sorry about that. If you could hear the background noise, my kids have changed the ringtone for my new phone, my Moto X, and I don't quite know how to change it. I haven't spent any time changing it. It's pretty obnoxious. Hopefully you didn't hear that. Nonetheless, they think it's funny, and I guess it sort of is. Anyhow, I was trying to get long. What wasn't funny was trying to get long. Not overly aggressive because there was certainly some risk here. If you see the low there was 57. Scroll down about a third of the way, low is 57 of that bar. Same with the prior bar. Whoops. It just never got to 56.75. Remarkably. My target was +2 and +5. +5 would have been, let's see, 56 plus 5, 61.75. Definitely would have hit it, no problem. So that was disappointing. Great idea. Great way to manage it, avoid losing gap trade. All in all, a solid day, a quiet day, because none of the data was really strong enough for me to trade straight up on probabilities, but that happens. We'll see what tomorrow brings us, but that is the wrap for Tuesday, November 5th. Have a good one.